microfinance to the next level. We are looking at growing outreach, we're looking at growing customer contact, and we're also looking at growing the microfinance sector. So my first question is to you, Mr. Kwikiriza. How are fintech partnerships redefining the delivery of microfinance services, especially in rural and underserved markets?
Thank you so much, moderator, for that question. And I will begin by why did we decide to come up with this initiative, the Microfinance Technology Summit Edition 1 in 2023. It's because we had already realized, especially in our country, but also looking at the statistics across the continent, that it is almost impossible to achieve financial inclusion without leveraging all technology. That's why we decided to partner with SNG events and decided to always bring fintechs together, and then we discuss, especially looking at the solutions they have and how we can connect microfinance institutions and circles in an endeavor to accelerate financial inclusion. So I think what we need to discuss and agree, not only people at the panel, but also everyone here, is what do we need to do first and foremost, and what are the challenges that we see at stake. Number one, we need to see where is the technology taking us globally, and how can we ensure that digital financial services reach everyone. Number one, before we even look at the fintechs that are here in Zimbabwe or in Africa or in Rwanda, we need to know what are the services that are lacking at the field. The rural farmers, the agriculturists, the SMEs and the MSMEs, the cooperatives, what are the services lacking? And why do they have, why do we have limited access to those services? So we need statistics. We need to look at the data and then analyze the challenges. Let me give a quick example. When we go back to Rwanda, we have statistics as per the Finiscope survey 2024 that indicates that we now have 96% access to finance. But when you dig deep in the report, you find that the uptake and the usage of financial services is below 50%. And that's a challenge. Then you ask yourself, why? We are talking about 96 financial inclusion. What does that mean? Opening of accounts only? That is not enough. So we realized that whereas people open accounts in financial institutions, but the uptake is completely below. And the reason why the uptake is below is because we lack digital financial services or products that are tailored to the needs of different segments of the population. Therefore, we need to align or collaborate with different fintechs that have different financial digital services. For example, why do we want someone to walk 10 kilometers, spend time, resources in terms of transport, and energy to go and look for a service at a branch or the head office of a microfinance institution? Why can't we therefore open up a digital service where a farmer or that woman who is doing service, multitasking, open up an account, request for a loan, then the financial institutions conducts a credit rating, approve, and then disburse a loan. Therefore, we are looking at different fintechs with different solutions that can be able to rate, can be able to analyze, can be able to disburse a loan, and can be able to do a recovery without wasting time, energy, and resources along the way. Therefore, that's why we have different fintechs that can provide those solutions. I think we will pick from there, but I just wanted to say that the only way to address this is to ensure that fintechs have different solutions. The last example I can give on this, Madam Moderator, is that, for example, in Rwanda, we are talking about 70% of the clients of the microfinance institutions being rural farmers, MSMEs, and most of them cannot read or write. So how do you reach out to all those people? How do you ensure that the loan you are disbursing is now aligned to the weather conditions in the area? So you need climate risk assessment digital tools. So all these the products is what we want to discuss here and help everyone, regardless of where they are located or the geographical location. And that will help us achieve both financial inclusion and uptake of financial services.
Thank you very much for that elaborative response. While I still have you on the spot, as the Executive Director of the Association of Microfinance Institutions in Rwanda, what is the role that microfinance associations play in driving digital transformation amongst the members within the association?
A good one. A good one. What are we supposed to be doing, or what are we doing as the Association of Microfinance Institutions in Rwanda? And we believe without driving this agenda, I think financial institutions or circles will take long to achieve this. Number one, we need to be data-driven. So what we do first is to conduct assessment and survey and determine the gap between demand and supply. What are the challenges on the side of the demand side? Is it because of the language? Is it because of the financial education and literacy? Or it's because of the mindset that they don't want to do business? So we need to have data that bridge the gap between the demand and supply. Then on the side of the supply, we need to have data. Why don't you come up with products that are tailored to the needs of the clients? Products that look at the different segments of the population. What is the issue? Why don't you have digital financial products that will be reaching out all these clients? So that is number one that we do. We ensure that we are driven by data to ensure that we make informed decisions. Number two, what we do is what we call sector coordination. You know, we have different development partners that come in the country, can come in Zimbabwe, in different countries in Africa, in Rwanda. You have different development partners. But at the end of the day, they are working in silos. So the association is supposed to be coordinating who is doing what. There are development partners with seed capital. There are development partners that have funds dedicated to different initiatives. So what we are supposed to be doing is to ensure that development partners are coordinated to address a particular issue. In that context, that's why we came up with the Microfinance Technology Summit, where we bring different fintechs from Africa, from Asia, from Europe, and then we coordinate that as we address the problem. Number three is to advocate in terms of policy and regulatory framework. So we are supposed to be looking at what are the policies on ground, what are the regulations on ground, what is lacking, are they helping the sector? And then you play a midfield role by aligning what is needed and what should be in place. Number four, what we do is we help our member institutions develop products and training materials that will help them reach out to their clients depending on the need. For example, if I can pick an example, in Rwanda, we have products that target young women in business, young women that have already finished school, university and tertiary institutions, but they cannot access jobs. So we help them to design products that are service-centered. We have products in tourism and hospitality, products in hotel management for youth and young women. So I think the association is supposed to be looking at what is this single institution cannot do, and then you do it. Bring together, we have what we call learning events. So we organize learning events at least 3 or 4 a year, bringing together policymakers, researchers, development partners, and regulators, and then they discuss on how these issues can be addressed. So that's what we're supposed to be doing, and that's what we are doing. That's why we are here.
Thank you very much. We can't wait for our trip to Rwanda to learn more about
You
how,
must
as an
welcome.
association, we can partner with you. Over to you, Emily. Since you are in the tech space, I think my first question to you will be, how can AI and data analytics enhance risk assessment and credit scoring for microfinance without excluding the vulnerable people?
Thank you, Isabel. So the good thing about AI is that you can train it. That's the best thing about AI. So when it comes to doing AI, using AI and data analytics for risk assessment, you train it on how to analyze your customers. So you train it on the data to use so that you can qualify your customers for loans, so that you can analyze their credit worth and their credit risk. So how we are using AI and data analytics, for example, at Rubik's, is that we're using it to analyze customers based on the different types of data that we get. So this could be existing data from MFIs, so we're helping you know more about your existing customers. This could be data on mobile money statements, bank statements, CRB data, data from even digital payment channels, e-commerce platforms. All these platforms and all these data sources, they tell you so much about your customers, and we collect so much data on our customers, yet we're not exploiting that data enough. So how AI and data analytics comes in is we take that data, analyze it for you, apply different analysis and scoring strategies on it so that we can help you know the behavior of your customers. How do they spend their money? What do they spend it on? What payments do they make? How regularly do they make such payments? And now this just gives you a better holistic view on your customers. And you're not just looking at one thing. You're not just looking at a bank statement that has money in and money out. You now know every single week your customer makes such payments, every month they make such payments, and now you're able to establish this is their credit worth, or this is their credit risk. So that helps in terms of financial inclusion is that we are not locking people out of credit. We are saying that if you're a high-risk customer, based on the analysis that you've done, we'll qualify you for a smaller loan to start with. So we don't want to lock people out. So instead of just looking at one source of data, let's say like a bank statement, and saying you don't have enough data here, so you don't qualify, we'll give you a holistic view of, let's say, Jackson as your customer. And now you'll be able to know, we'll start him off maybe with a smaller loan. As they repay their loan, this data is, again, still fed into the system, still fed into the algorithm. And now, even as the customer continues being your customer, we know more about them now, even in terms of their credit history. Now they've built a credit history with you. So that's just the goal of AI and data analysis, helping you know your customer better so that you can qualify them for loans and include them in the finance.
Thank you very much. I think sometimes as institutions we undervalue the data that we already have within the business.
Yes.
So I think it's good to make use of the data that we have to try and create a database and be able to assess our customers better. Thank you very much. Then over to you, Dr. Mpambwa. So I think as a practitioner, you will take us into the microfinance space. And my first question for you is, what are the key ingredients for building successful and sustainable partnerships between microfinance institutions and fintech companies?
Thank you. Thank you, Isabel. Okay, I think first things first, and especially for the fintechs, we want them to understand that it's not a tech partnership. It's a trust alliance that we'll be having. You know, at the heart of any sustainable MFI, fintech partnership is just but a shared purpose. So both parties must be able to align around a common goal. And for us as microfinance institutions, we are saying the common goal should be that access to financial services, especially for those in undeserved populations. And what MFIs are bringing to the table in this partnership is deep community trust. We are the ones who are sitting with the communities where they are. And we are the ones who have got that trust with the communities. And we are the ones who have got the market insights and already
where we have a circle on every administrative sector. We have 416 circles. So the government of Rwanda came up with an initiative to digitalize all the circles across the country, the Umurenge circles. And what they did, they used the local brain, homegrown initiatives, and then they came up with a core banking system that is multi-tenant, where all circles have been automated, but using the same core banking system. So that, of course, removes that where one circle is weak and the other circle is strong, so they all connect the same core banking system. And then they have the same infrastructure. They use the same infrastructure both for primary and secondary data. So that helps all those institutions now to plug in and then use the same infrastructure. So that is very, very important. Secondly is what we call shared audit. So most of these development partners and those that provide the grant, and they need to see how these institutions are performing, conducting a due diligence. So what we do as an association, and what I recommend for other associations, is to help the member institutions in conducting the due diligence. So you help them to come up with a clear picture so that whoever wants to support them have now the clear report about their performance. So we call it shared audit and shared due diligence. Lastly, on the shared is what we call shared management information reporting. We are implementing a project as the association where all the microfinance institutions and circles will be reporting using the same management information system. I think you have heard about a report called the fact sheet, where a financial institution will use the information that they submit to the national bank through electronic data warehouse and use the same information, download it to a system that will provide them, and then come up with what we call a fact sheet. The fact sheet helps them to have data and information, do an analysis, and then make informed decisions. Then after they have generated that report, they do what we call a compiler. The association will now be doing what we call a compiler that helps them to know how the sector is performing. So that helps us now to how these microfinance institutions can be able to develop digital financial services regardless of their size. Second, but not the second one, is we are establishing a microfinance liquidity fund. We know that these institutions do not have sufficient working capital. So what we are doing, we are setting up a national basket where we will be attracting investors from different parts of the world, equity and debt. And those institutions that probably are lacking working capital will be coming and then access finance to be able to develop digital financial services or to come up with a core banking system that suits their standards. Lastly, what we are doing is we are conducting advocacy, mapping out different development partners, and why we still insist on this Microfinance Technology Summit. So it is through here that we can identify investors with digital solutions, and then we identify institutions that cannot afford those solutions, and then we help them mobilize resources, and then they implement. So that's what we do, and that's what I recommend other institutions to do.
Thank you very much. My chairman is very passionate about shared digital or IT platform. So I'm sure we'll be learning a lot from you as well when we come down to Rwanda. Thank you very much. Over to you, Doc. My last question to you. Looking ahead, what must MFIs do now to remain relevant and impactful in this fast evolving financial ecosystem?
Okay, so for us as microfinance institutions, what we must do, and especially from here, we need to be able to adopt agile technology. And we need these like yesterday. What I want to say is that we should remember that technology is not the solution here. Technology is not the solution. It is only but an enabler. Tech is an enabler for us. What truly then drives inclusive impact is our ability to build systems that are ethical, transparent, and deeply human-centered. So from here, as institutions, these are the things that we need to go out there and look for. We need to shift from seeing ourselves as lenders, but to see ourselves as enablers and the economic empowers of the nations that we are coming from. And strategic partnerships are very good for us. We have talked about how we can collaborate intelligently with the fintechs and the like. And we here as microfinance institutions And also knowing that we are still in emerging economies where we can never just talk to someone over a gadget. There are times when we need to be there. There are times when we need to feel together with them their problems. There are times that we need to be in their shoes, right there as they see us. You know, there's so much for us as Africans. You know, with other maybe cultures, it's different. Someone can really attend a funeral over Zoom, you know, and they feel, yeah, my sister was there, the funeral, she was live on Zoom and we're singing. But for me, no, I want her by my side. I want to be hugged, I want to be embraced. So this is what we are bringing as microfinance institutions, and we are saying, tech is there just to enable us, but we need to be there in our societies. We need to feel them. We need to understand what they are going through so that the solutions we give, they are not running away from how they are living in their everyday life. So for us as MFIs to thrive, we cannot just digitize our forms, but we need to digitize our values and stay rooted in the mission while we are evolving our models.
Thank you very much, Dr. Pambwa. Again, I think what is key in what's coming out there is understand what the customer requires. It's not creating products while we sit in the office. Thank you very much. My last question to you, Emily, is what is that one piece of technology that you believe will have the biggest impact in financial inclusion in the next 5 years? And why do you say so?
So, my opinion on that is that embedded lending is one of the things that's going to have a big impact on financial inclusion. And I feel like we're speaking the same language, all of us here on this panel, when we're talking about partnerships and all the rest. So I'll just give you an example of MSMEs. So a lot of MSMEs use various digital platforms to run their operations. So they're making payments, they're supplying goods to their customers. Everything end-to-end about their operations is on that particular, let's say, e-commerce channel. And you'll find such an e-commerce channel is probably also integrated with a payment channel. So already, you have so much data on this MSME, on this particular platform, yet we are forcing them to use, for example, a bank. So all their information is on this platform, and now they're trying to get loans from the MFIs and the banks, and now the banks are telling them, but we don't know anything about you. Yet there's this particular platform or platforms that they're using that have a lot of data about their day-to-day operations and how much money they make, how they spend their money. So embedded lending is going to be the next phase of microfinance. It's already here. We're already powering such partnerships. So we want to see partnerships between MFIs, for example. So MFIs will come in with the financial muscle, and then the digital platforms will come in with the data on all these customers. So now the MFIs will be able to lend directly to the customers of these, hello? Okay. Yeah, so they'll be able to lend directly to the customers of these digital channels without these customers, for example, the SMEs, having to necessarily be direct customers of the MSMEs. Dr. Ethel has talked about who owns the customer. Maybe our main goal should not be focusing on who owns the customer, it should just be focusing on powering the customer. So when we have the digital platforms on one side and the MFIs on the other side partnering, you'll now need, for example, a credit engine to be able to do the analysis for you, to be able to help you figure out who you should lend to and how much you should lend to these people. So embedded lending is, in my opinion, the next phase of microfinance. And a lot of times when we talk about underserved communities, we look at people in rural areas, people low-income earners, and that's okay, yes, those are part of underserved communities. But for example, the MSMEs, they're also underserved because their financial needs are not being met. So the goal for the MFIs and all these digital platforms when they're doing the partnerships is to meet the customers at their point of need. Meet them on these platforms and provide additional financial services on the platforms that they're already using. Thank you.
Thank you so much. I think for us here, that is the one key initiative that will drive our future. Ladies and gentlemen, you will agree with me that this was a very engaging session with speakers that are very knowledgeable, very experienced in their line of work. Allow me to express my appreciation and thank you very much to my panelists, Mr. Kwikwiriza, Mr. Mashonganyika, Dr. Mpambwa, and Ms. Njambi Nyoike. Thank you very much for sharing your experiences, your thoughts, and your expertise. Thank you very much. Mr. Nyamazana, it is 12 o'clock. I am closing off the session now and handing it back to you. Thank you, ladies and gentlemen.